Hi everyone. I wanted to discuss something that happened this week that's making the news is that Shaw has been bought out by Rogers. So the Shaw shares have gone up. Rogers has offered to pay a certain amount for the shares, and a lot of people's values of their investments are up. And it begs the question, what do I do when something like this happens? Also, what do I do when I have a winning position? I bought Tesla, I've got Microsoft, I've got Apple, I got Amazon, and it's done really well. Do I keep it? Do I sell it? And that's a question a lot of investors just don't know what to do. So I thought I'd dive into that. So what's happened is Shaw shares are up 40%, but the buyout price is still another 20% higher. Why is that? Well, there's worry that the Competition Bureau is not going to let the deal get done. And so there's a bit of a question for investors. Well, do I take the profits I've made, or do I wait for higher profits? And I thought I'd dive into that a little bit more. This first chart here shows kind of what's happened with Shaw. It's trading around 23, it's jumped up to about $33, but the buyout price is around $40. And so, what's probably going to happen if things go well is that the shares will continue to trade up as more good news, more regulatory approval comes, and then they'll be close to that $40 when the deal finally happens. My worry is what happened to Bell in 2007 to 2009. The teachers' pension plan was going to buy them out, and so the shares jumped up dramatically, and they traded at that higher price until the deal fell apart, and they dropped down quite a bit, actually lower than what they were pre-buyout price. And so this is something that could happen with investors. And so what do? Also, what if you had Amazon shares? And they've gone up, and you've got this winning position, and you're looking at your portfolio and kind of trying to figure out what to do. And so I suggest you take a look at your overall risk budget. And so some of these positions have done really well, and you will say, hey, I want to keep them, I don't want to pull my flowers. And that's true, but they could easily, bad news can come out, they could fall to earth. And so I would take a look at how much did I want to have in technology? How much did I want to have in that sector? And maybe that's more than what you currently have there. So you want to take some profits from that. And maybe you're still in line. And then concentrated positions. So if one position's done really well and it's making up too much of your portfolio, you have too much risk there. Something can happen to that company. All good companies could have one event. There was Tylenol in the 80s. They had a scare because someone was poisoning their bottles. Drop down. Imagine Tylenol was a big part of your portfolio. So if I were you, I would take a look at your portfolios, take a look at the ones that have done really well, say, hey, yeah, I want to keep some of these, but take some of the profits. Now, if you've got Shaw, what I'd be looking at is taking a look at your risk. And so what I've been doing with my clients is saying, hey, you know what, we've made some money on this. Why don't we take half of it off and put it away, and then let's leave the other half and see if the deal goes through. And if it doesn't go through, that's fine. It'll come back. We liked the shares before. There might be another deal that'll come with it. And so that's kind of a strategy I've been using, is the half in, half out. So selling half the shares, keeping half the shares. I hope you like that. I got a quote for you. The best way to cheer yourself up is to try to cheer somebody else up. Have a great day.